Hey guys, Bill Soriano here from Pittsburgh. It's Saturday, May 17th, 2025. This will be the weekly recap using my damn near 100% objective 4-hour supply and demand trade plan. This is the PDF here. This is a weekly recap for that for the week of May 11th. So Sunday starting this past Sunday was May 11th. So this is the recap for May 11th, just showing you which trades are open, which trades closed, which trades we're looking at going into next week. Okay, they'll be included there as well because I did want to make a new video showing the new entry technique using both the 1 hour and the 30-minute time frames, which is a little bit different than this video right here. Okay, so if you watch this video right here, it just talks about 1 hour entry model. And what we actually do is, as I said, this video needs to be updated to reflect the 30-minute change of character. So I have the directions correct here, but I still have to make a new video. So let's look at what we have here for this week. This is the 4-hour supply and demand zone trade plan. And again, you can still save $50 if you want to sign up with JIFU. That's the new platform that we moved everyone over to. So we were all with IM Academy for 8 years or so, and the leaders in our community decided to move everyone over to JIFU. So we moved over to JIFU. You get all 6 of the academies here, the training for one price, and you get access to, what do we have here? 7 scanners right now. Pretty sure our impulse scanner is in here somewhere. I just don't know where they put it. But anyway, I'm doing a training like every week or two on one of the scanners. I started last week with the golden era scanner. And so I have a PDF file that you can access here. If you're interested in trading gold, let me know. But again, keep in mind, in order to get access to these 8 scanners, this golden arrow one here, arrow one, you have to be a member of JIFU. So the 4-hour trade plan is free. You don't need to do anything for that. But if you want to use the scanners, get the training here in JIFU, then you have to become a member and you can save $50. That $50 discount was supposed to expire on May 12th and they extended it to May 19th. So you still have a couple days where you can get that $50 discount. Anyway, let's look at a couple of these pairs here. So I'm just going to leave them up like this here so it's easier. We're on the 4-hour time frame. Again, once price hits the 4-hour supply or demand zone, well, first of all, we use the 3 moving averages on the 4-hour time frame to determine the trend. Okay. So at the time of this trade here, you could see that the trend was bullish. The 50 was above the 200, and they're both above the 800. So as long as price is above the 800, the 50 is above the 200, it is bullish. Now, price does dip down. You could see that the 50 does cross down below the 200, but that's okay because it has to do that to come into our supply and demand zone, right? It will do that from time to time, and price may actually even drop below the 800 EMA. But as long as the trend confirmation doesn't change, as long as you don't get, as long as you're not bullish and then you get a drop down below the, let me show you, get a drop down below the 800 EMA and you have the 50 down below the 200 as well, then the trend changes on, okay? But as long as that don't happen, you're okay trading from this area because it was based off of a valid trend confirmation when we set it. So again, price hits the 4-hour zone, we drop down to the 1 hour, we wait for that buy or sell shift using the 5 and the 13 EMA. Once we get that, we drop down to the 30, we wait for a change of character. Again, the indicator, the Lux Algo Smart Money Concepts indicator is giving us these supply and demand zones. It's giving us these changes of character on the 30-minute time frame. So that's why this is damn near 100% objective. There are some times when that 30-minute change of character is just not right. And there are also some other times where it's giving us a supply and demand zone and there hasn't been a clean break of structure to validate that zone. So sometimes you do have to look at that. But if you're not familiar with things, you just use the indicator and you just use the strategy as is. Okay. So price came into the zone here. You see where the invalidation zone would be down here below. We set it down below this order block here because we had another order block here as well, right? And we did have some imbalance there. So we set that invalidation zone right down below that imbalance going into the next zone, right? If you shut these on and off, you can see that. And so we could see how price made and price came back, getting us our entry here. And then it moved up, it pulled back, and then it moved up again a little bit higher. So you would still be in this trade again. Once you are up by 2% in a trade or 1 to 2, right? Once you have a 1 to 2 in a trade, then you can sell half the position, move the stop loss to break even, right? In this case here, this trade was set up as a 1 to 2.83. And right here, we did not yet have a 1 to 2, but right here we do. So at this point right here, we would have sold half that position and now moved the stop loss to break even. Okay. So this ends up being a winning trade. And then of course we just let it run to the take profit, the goal here, which is the next supply zone. Since we're trading a long position from a demand zone, the stop loss goes down below that demand zone and the take profit goes at the beginning of the next supply zone. And then it's, of course, it's opposite for a selling position. So we would sell half the position, let it run now to where it gets the full goal, or we get stopped out at break even on the other half. Okay, let's look at, we didn't have many here. We have EURCAD. This one here was not a trade because when we set this trade up, here's our demand zone that we're trading from because price was bullish. The moving averages were telling us we were bullish, right? They still are telling us that. But when we set this trade up, right, we had to put our stop loss here, our take profit here, and that's only a 1 to 1.34 risk to reward, so we would not take that trade. We need to have at least a 1 to 2. Again, we start out trying to use the 71. This is all in the PDF here, right? We start out trying to use the 71, then the 78.6. If those don't work, we look for a refined 30-minute supplier demand zone to trade from, right? And if we drop down to the 30-minute, I think that zone here was actually here right at the 78.6. So there was no good entry for this trade to give us our risk to reward that we wanted. EURNZD, this one here, this one ended up being a 1 to 2.28, and we had to use the 30-minute refined demand zone to take this trade, right? This was bullish here, right? 50 above the 200, price above the 800. The 50 does dip below the 200. That's okay as long as the trend bias does not change from bullish to bearish. We're still okay here. Okay. Now, if price would have also dipped below the 800 with that 50 dropping below the 200, then we would want to not take this trade. But that didn't happen. So the 71 didn't give us a good risk to reward. The 78.6 didn't give us a good risk to reward. So we had to drop down to the 30-minute, right? And we had to use the 30-minute zone which was down here at the time. It was the 30-minute we used. We might have used the 1 hour zone. Hmm. Yeah. So what happened was the 30-minute zone has now disappeared because price went down below it a little bit. But again, it didn't go through our invalidation zone. So obviously we would still be in this trade, right? This one did not quite get to a 1 to 2, right? And then kind of what happened here, uh, price kind of tried to get a little bit higher here, and then it gave us a new 4-hour zone here. But this 4-hour zone is invalid because we didn't get a clean break of structure to the upside. Or I'm sorry, we didn't get a clean break of structure to the downside. So this zone here is based off of this move down, but that's not a clean break of structure. So that zone is not valid to me. We need to get a close. We need to get a candle to close below this low here. Okay. Let me just show you that. And that did not happen. So because that was not a clean break of structure to the downside, this zone here is not valid. Okay. If it would have moved down a little bit lower, then this zone would be valid and we would want to take our profit once price hit that zone. So initially, we would have wanted to move our take profit down to here, even though it only gives us a 1 to 0.1 to 1.54 risk to reward. We're already in this trade, okay? So we have to do what's right, and that would be to get out there. However, since that's not a clean break of structure, we don't have to do that. Now, we don't know what's going to happen here. We'll have to wait and see next week how this works out. So we looked at EURCAD, right? That did not give us a valid risk to reward. We looked at EURNZD. We're still in that trade. We looked at GBPAUD. This one, we would have wanted to exit half the position in profit, right? And move the stop loss to break even, okay? And then the last one here I want to show you is NZDJPY. And this one has not gone off yet, but I want to show you this one. And I'm going to make a separate video showing this one so I could show people the new entry strategy. So basically here, here's what happens. Let's just remove this for right now. And let's just remove this. So here, we're on the 4-hour time frame. We're bearish, right? Price is below, price was below the 800. I'm sorry, we're bullish here. Okay. At the time that we set this up, price was above the 800 and the 50 was above the 200. So that tells us that the trend bias is bullish, right? We use those 3 moving averages. Now, at that time, we set this zone right here, right? It's no longer showing up because price went through it, but we set this zone as our supply zone, and we set our alert right at the beginning of that. Price came down, hit the alert. Now look what happens here, guys. Price drops below the 800 EMA, which is a bearish sign, but the 50 EMA is still above the 200. So as long as that stands, this is a valid trade. Also, price invalidated our zone, but if we look to the left, we can see clear imbalance, right? We can see a clear imbalance here that would cause price to come down a bit. So normally you would have a situation where this trade is invalid because the 4-hour zone has been broken. Not only that, price is now below the 800 EMA for a buy, but the trend bias has not changed because the 50 is still above the 200. And we did have some imbalance here as well as another supply zone down below here, okay? And that justifies this move through this first supply zone here. Now you have to be careful, okay, but we're going to drop down to the 1 hour and we wait for that buy shift. Well, right here, the 5 EMA, which is the yellow line, crosses and closes above the red, which is the 13. On the 1 hour time frame, that gives us our buy shift. That's the first confirmation. Buy shift occurs on that 1 hour candle. We then drop down to the 30, look for a second confirmation. We need a change of character on the 30-minute time frame. Did we get one? There it is right there. The indicator is telling us that this is a change of character. Is it valid? Well, price moved down, made a new low, right? Price came down to here. It moved up, made this lower high, moved down, break of structure, made a lower low. And then when it moved back up, it gave us this change of character right here. Okay. So what we do is when we get that change of character, right, we're going to, on the 30-minute, we're going to draw our fib from that low to that high. Now at that time, initially that when I looked at it, it was right here. Okay. Now we do not set our limit order until we get a pullback to at least the 38.2 because we don't know if this is just going to keep moving up or what. So you can see it keeps moving up. As it keeps moving up, we have to do what? We have to adjust our fib. So now our fib is right here, right? We could see the price did move back to the 38.2. So that tells us that it is now safe to set a limit order. Okay. Now we want to go back to the 4 hour time frame because the fib is going to be the same no matter what time frame you're on, but it's based off of the 30-minute structure, the change of character, right? We got the 1 hour buy shift and the 30-minute change of character. Okay. So we want to make sure the fib lines up. It lines up the same 99% of the time on all three of the time frames you look at, the 30, the 1 hour, and the 4 hour. Sometimes there could be a different wick on the 1 hour or the 4 hour that doesn't line up exactly. But most of the time it does. So now we would set our limited order to 71. Well, we want to make sure that this is at least a 1 to 2 risk to reward at the 71. So if we put our buy tool here at the 71, now the question becomes, where do we set our invalidation zone because we went through this supply zone? So since we've gone through the supply zone, we're going to have to go down to at least a little bit below the next one. There's some imbalance here, like we said. There's no imbalance down here. Price is very efficient coming out of this zone, right, until it gets to here. This imbalance has been filled. So we're going to give us a little bit of room here. And then, of course, our take profit or our goal goes at the next supply zone. Since we're buying from the demand zone, right, and we're setting our stop loss down below there, we move this up to the beginning of that next supply zone. We have a 1 to 3.4 risk to reward trade. So we are good at using the 71 fib for our entry. Now, if we weren't, right, if we had less than a 1 to 2, then we would want to try it with the 78.6, right? 78.6 gives us a 1 to 4.04. And if that still wouldn't work, then we would drop down to the 30-minute, right? We would say, here's our 30-minute zone right here. It's actually right at the 78.6 anyway. So that would give us our third choice for entry for our buy limit order. So that's what we're going to be looking at this week, guys. Once the market opens on Sunday, we'll be able to set our limit order. You can't do anything while the market's closed. We'll set our limit order at that 71, and we'll see how this trade pans out. Now, I should have told you at the beginning of this video, guys, my disclaimer, I'm not an investment advisor. I'm not qualified to give you investment advice. Anything I share with you on my videos and my PDF files is for educational purposes only. Forex is risky. You could lose all or part of your capital trading Forex. It's important that you learn proper risk management, proper money management, and it's of utmost importance that anytime you try a new strategy or anytime you're a beginning trader in general, you must trade on a demo account first for at least 25 to 50 demo trades using a particular strategy before using a live account. Okay, so this has been the weekly recap for the week of 5/11. Okay, and I'm going to what did I want to share with you? I did want to just remind you, uh, you can still save $50 if you move over to GIFU. Let me know. I'll send you my link. I do put it in the description area here on YouTube. I don't know where else I'm going to post this video today, but if you want to get access to all 6 of our academies, Forex, crypto, social media, e-commerce, mindset, finance, plus all of our scanners, then just let me know and I'll make sure you get that link. Have a great day, guys.